sterling certainly got a rocket boost last week after this shift in tone from the BOE. Are you penciling in a November rate hike?
No, we're not, actually. I mean, I think the market's interpreted as the comment generally very hawkish and was caught a bit off guard. But I think they took it too far, to be honest with you. And so, you know, comments like you just noted, I think, are exactly them kind of backtracking a bit to bring it back into line with reality.
But, you know, clearly there's a shift.
Yep.
Clearly, maybe some, if not all, want to remove the emergency cut that was implemented after Brexit. They highlight the improvement in the data since August. The slack is eroding. Wages aren't doing too badly. Why not just get on with it?
Well, I mean, the data has gotten better, and I think, you know, that's the reason why they can do it. And people are kind of always just pointing to Brexit as kind of the reason why the pound should be weak. But Brexit, as many people have noted, is quite a ways in the future. And I think people are starting to realize until something actually happens around Brexit, and it's noteworthy, let's pay attention to the near-term fundamental drivers of the pound. And as you noted, some of the economic data here has actually been pretty good. And so I think traders are just looking through and saying, you know what matters is what's happening now, and what's happening now is a little bit more positive.
So how has your attitude towards asset allocation changed in recent times? Not just because of everything that's going on with Mark Carney and the Bank of England and Brexit, but also these German elections.
Yeah, we've been fairly risk-on in general, and we're going to maintain that posture overall. And the reason for it is, despite all the headline risk, and there is no shortage of headline risk, whether you're talking about Brexit, North Korea, Trump policy, administration dynamics, there's plenty of it. But this market wants to go higher. They're focusing on fundamentals. Earnings dynamics are good. Overall, leading indicators such as PMI trends globally are pretty strong. The market's looking through the negatives right now, and I don't see what really changes that as long as those fundamental drivers stay in place. And they look pretty sound to us for the next, let's say, 6, 12, perhaps 18 months.